Good afternoon. My name is Sarah Lee. I'm the first year full-time MBA student, and this is Long Hong, a sophomore student at UCLA. We are co-directors of today's panel discussion focused on cross-border investment, trends, investment patterns, and opportunities for China and the United States. U.S.-China foreign direct investment is still at an early stage, and it's among the most important channels of cross-border economic exchange that will shape U.S. and the China relations in the years to come. While U.S.-China economic relations have strengthened, there is a need for greater symmetry in a cross-border FDI relationship. So today, our panelists will discuss more about the recent trends and the investment patterns. And they will also discuss about the barriers to investment financing strategies and opportunities in a two-way relationships. We are delighted to welcome the following distinguished speakers on the panel today. Mr. Dan Chen is the head of USTMT of CEC Capital. And Mr. Philip Hurst, Senior Vice President, Director of Wealth Management and Premium Banking at Cathay Bank. Welcome. And Mr. William Shum, the partner of Shum Law Firm. And Mr. Curt Moldenhauer, partner in the PwC Stills practice. This panel will be moderated by Joseph Lee, Senior Vice President of the Wealth Management in Cathay Bank. Mr. Lee has nearly 40 years of extensive experience in the private banking and the investment industry. Since 2012, he has been working with the Cathay Private Wealth Management, and over the last 3 years, he has led his team's revenue from 4 million to almost close to 9 million. Mr. Lee has also served as a vice chair, trustee, administrator, and commissioner for several Los Angeles County departments. So please join me and welcome our moderator and panelists. Thank you.
Hello, good afternoon. Welcome to join our this year's seminar and conference. And we have very distinguished 4 panelists. They have very knowledgeable experience, especially some of them, they have the experience not only in US, they also have investment experience in China. So I want to start with a 5 minutes introduction and the view point of our topic for today. I will start with Mr. Chen. Can you just spend 5 minutes?
Sure. Hi, I'm Dan Chen, currently Managing Director and Head of the U.S. office for a leading media and technology investment bank in China. They're called CEC Capital. In Chinese, they're called Yikai Zibin. Our company, actually, I was originally part of an investment bank focused on the media and technology sector here in the U.S. and focused mostly on domestic companies here in the U.S. CEC Capital, Yikai, about late last year, had acquired our company as their first step towards expanding internationally. And it's sort of symbolic, and it is indicative of the trend that we're seeing, which is more and more Chinese capital, as well as more Chinese companies looking to buy companies here. And that's been a very big and strong trend in the technology and media industries from what I've seen over the past 4 or 5 years. So I'm a bit of a manifestation, if you will, of this growing trend, and I think that's one of the reasons why I found this to be a great opportunity to be here in front of you to talk about this, and I hope to be able to shed some deeper insight for all of you about that market and some of the things that I'm seeing as an investment banker in the practice.
Thank you. Thank you, Dan. By the way, I just want to emphasize our today's topic is investment, entrepreneurship, and growth strategies, cross-border investment trends, investment patterns, and opportunity for China and the United States. It's a very long topic. Last year, we only have one. What do you think about the relationship business, China and US? And last year, we only have 3 panelists. This year, we have 4. So 5 years from now, we are going to have 10. Okay, we're going to have our second panelist, Mr. Philip Hurst, the Senior Vice President and Director of Wealth Management and Premier Banking, Cathay Bank.
Thank you, everyone. Hi, how are you? I work at Cathay Wealth Management. My functions and responsibilities there include helping high net worth Chinese nationals go through financial planning, building portfolios, asset allocation, protecting their wealth through risk management and other things associated with helping wealthy clients transition from being only China-driven into looking outside at other opportunities. And Joseph and I both work there, and so we're both happy to be here today, and hopefully he'll ask me some easy questions because he promised me he would. So.
Yeah, I know Phil for 25 years, since Citibank. We all worked for Citibank before. Yeah. And at that time, he's, well, you're still handsome, so I don't want to. So we know each other for 25 years. Okay,
At that time, I was blonde-haired, and Joseph had black hair. And you can see who's worked harder.
And we both sing, right?
That's right.
And he's specialized in KC and the Sunshine Band, and he's KC. Okay. Anyway, so our third panelist is Mr. Bill Shang, and he's the attorney of international business.
Hi, everybody. Good afternoon. I think at the beginning, two reports worth mentioning. We're going to have this discussion. The first one is the 2015 Brookings Institute report on the two-way investment between China and the United States. And the second one is the Rodin report in 2016. Those two reports are very good, so you can find many useful information there, the notes there, if you want any data on this issue. I'm an international kind of lawyer. I used to work for a firm here in Los Angeles downtown area. It has been merged with a Chicago firm. His name's Graham & James. And also I worked for a firm in Taipei. That's 20 years ago. It's Lee & Lee. I don't know whether anybody working there. But it's also an international firm at that time. But I was, I've been here working in Los Angeles for 25 years now, actually. I went back to Taipei for 4 or 5 years there, working for Lee & Lee. So here, in this, within this 20 years, I met many investors from both sides, inbound and outbound. I think it's a very fantastic working experience to directly talking with them and planning with them on all the projects and go to the details, the management team, how to form them, and how to explain to them about the legal environment here from the very beginning, from the legal capitalization first. So that's about the thing I'm going to say today at the beginning of this, this discussion. Thank you.
Thank you, Bill. The last but not least, our panelist, he is one of the special person that can give us very unique experience, because most of us, we're talking about the Chinese, they come over to invest in US. And this gentleman, he spent time and bring clients over to China. So let's welcome Curt.
Thank you. That's a very nice introduction. I appreciate it. My name is Curt Moldenhauer. I'm a deals partner with PwC. I've been working in M&A for about 25 years. I'm a Northern Californian, so I'm enjoying your weather today. Thank you. Mostly in and around technology and consumer products companies. I've also spent about a third of my career overseas, close to 5 years in Europe, and 5 years in Shanghai as well. I do a wide variety of things. I do strategy and commercial due diligence, financial due diligence, structuring, and perhaps most importantly, for this conversation, integration. You know, it's interesting because I'm a little bit jealous of everybody in here because I know there's a lot of students. I wish I was in those seats kind of going forward rather than with a lot of my career behind me. And I'll tell you why. I have 2 undergrad business school students not at UCLA, but back east. Both of them are in business and learning Chinese, so you can tell where I'm making my bets. So again, thank you for your time today, and look forward to our discussion.
Thank you. Let's give them a big hand. We are going to have the next session. I'm going to ask each one of them questions. And I separate for 4 segments. The first segment is type of investments. And the second one is financing. Number 3 is challenge. And then it's outlook. And I will ask them, each one of them, regarding this segments. But after that, then we have Q&A. So any one of you, if you have a question for individual or just for group, then we can ask them to answer. Let's start with the first question. I have a question for Dan. As a Chinese firm and individual investment look for diversity, what sector and geographic do you think will be main focus? And also, for your clients from different industries, you have a lot of industry, I think, entertainment, advertising, software data. And do you think they are looking for cross-border buyouts and venture investments for the same reason?
That's a big question. So first of all, I should clarify that most of my activity revolves around representing companies here in the US or Europe who are interested in accessing investment capital from China or Greater China, generally speaking from Asia Pacific. And so the most activity that I see, the activity where I see, the areas where I see most of the activity, again, I'm a media and technology investment banker, so the industries that are extremely interesting right now for Chinese corporate investors here in the US, coming here into the US, are all the frontier technology sectors. When I say that, I mean sectors such as companies that are in the VR sector, the augmented reality sector, artificial intelligence, machine learning, big data, automotive, self-driving vehicles. And at least in the technology sector, the reason for that is because China does see itself as potentially being an emerging leader in those categories. In China itself, for example, artificial intelligence engineers are at a shortage. And so one of the reasons why companies like Baidu, for example, will buy or even invest in startups here in the US is because it's one way for them to gain access to that kind of talent where back home in their home market in China, there aren't enough engineers. So it really depends on who you're talking to, which companies you're catering to, but in general, those are some of the sectors that I see a lot of activity in. In the media sector, I've also seen a growing amount of interest in companies like Wanda looking at very large traditional media assets out here, companies like Dick Clark Productions. About 2 months ago, Wanda was just about to close, and then all of a sudden something happened. But we're going to see more and more M&A activity like that in the media space. There's still a lot of interest from Chinese film and production companies, and even companies outside of film who see entertainment as a big growth area for the domestic Chinese market. And one way for them to enter into the market is, of course, to buy assets here in Hollywood to gain access to that know-how, and then to be able to transplant that back to their domestic market and become a leader in the space. So I think in general, it really depends on which sectors you're taking a look at. But overall, I would say that looking at it from the perspective of a technology and media investment banker, I would say the areas of interest right now are some of the areas that I just mentioned.
Okay, thank you. I have the question, the most difficult question for Philip, because he bribed me. He said, give me a difficult question. No, easy question. Okay, what are the most important reasons and type of investments that more and more Chinese high net worth individuals are seeking overseas investments, in particular in the U.S.?
So that's interesting. Why are they seeking overseas investments in the U.S.?
And what type of investments?
And what type of investments? Well, typically high net worth Chinese, they've achieved their wealth usually through a concentrated position in a business or through holdings in real estate. So I think some of the reasons that they're looking to diversify outside, of course they go to Hong Kong a lot as well, and they linguistics and cultural reasons they go to Hong Kong. And when they're coming to the United States, I think they're looking for diversification from a geopolitical point of view. The elephant in the room is, as far as China's come, I think there's always, when you make a lot of money in China, there's a little bit of a slight mistrust of what could happen, and although they're making more progress in so many ways, it's incredible all the time. But I do believe that's the elephant in the room. And I think they come to Europe and they come to America particularly looking for diversification from a geopolitical point of view. And I think they're looking for diversification seeking returns. They come, as Chinese clients come here, they comment to me all the time how cheap the real estate is, and they've usually made their wealth in the real estate. That's how they became wealthy, and they look back at all the risks they've taken and they go, it's great to be, as you guys are students and starting out, to become wealthy, everyone should aspire to some level of wealth. I think it's a great goal in life, but having wealth is very complex. There's always regulatory things and taxes and ways you can lose your wealth, which is really not a fun thing. So I think they come here looking for safety, and they're seeking returns with the interest rate environment being so low. They're seeking better returns, and I think they do some of the same things they did in China. They just want to geographically diversify.
Thank you.
Yeah.
I think I agree with Phil that most of our high net worth clients from China, they come over, they're looking for safety, and because they know how to make money in their own country. And they come over here, they want safety, and also they try to find something that they're familiar with. Of course, real estate. That's one thing. They all, Chinese said, 有土斯有财, right? So they like to invest in real estate. Okay, question for Bill. You have a law firm focused on international business law. What is the primary target customer group from the US and China? What type of investor are your main customers?
My main customers from, mainly China is right now having more investor here than in maybe any other country in the world. I think the most important thing they're seeking for is a legal system protecting their property. The general property rights will be recognized and protected without interference from maybe other powers. So that's the most important thing. And the second thing is that, used to be several months ago, they're looking for a very strong U.S. dollar. So that's the basic advantage they're going to have if they have properties here, real property or other forms of property. So most of them, when they come to this country, they will ask a lawyer. When you say safety, they will translate that into legal system, legal protection. They will ask specific answers to the protection they're going to have. If they buy things. Of course, they will ask for taxation and sometimes succession questions, but usually it's the protection of their rights as an owner of the real property or other corporate ownership here. So general legal protection for general property will be the most important thing, even stronger than unpredictability of administration. Maybe some politician will say something else, but still, I think they look for a beautiful legal system to protect their rights here. I think that's the most important.
Okay, thank you very much. And Curt, you were based in China from 2008 to 2012. And can you talk about the basic trend and activity by foreign firms in China? And what are the financial and the tax incentive available for foreign investors in China?
Okay. Before I do that, I'm going to build on something that Dan was talking a little bit about, because I think it's important. The two bilateral flows really relate to each other. And what Dan was talking, there's two reasons that Chinese are motivated to buy assets in the U.S. One, because the government tells them, or two, because a private enterprise or a POE has some sort of reason to invest in the U.S., but uniquely to China, to take that asset that they buy back to China. Now, this is a phenomenon that we really haven't seen in a lot of investing history, right? And typically, if you go back to the Japanese and the Koreans and the Europeans, the reason they invested in the U.S. was for the U.S. market, because we have a very big market. What does China have? A very big market, so they don't need our market, right? So again, all the things that Dan said in terms of the entertainment and media, we're also seeing in consumer products. And certainly the technology flows, some of that is related to POEs, but some of it, certainly around semiconductor, is because the government wants Chinese SOEs to buy technology outside of China. Does that make sense? Hopefully. Now, if we pivot a little bit over to U.S. investment into China, we know that's been going on for 30, 35 years now. What was the original reason that everybody went over to China? Low labor, right? Cost arbitrage, right? China became the manufacturing center of the world. Well, guess what? That doesn't work so well anymore, because now wages have risen tremendously due to the success of the China economic market, right? That's the bad news. So that strategy doesn't work anymore. What's the good news? Well, because of the rise of labor costs, we now have the emergence of the Chinese middle class. Now, I don't know about you guys, but I get pretty excited about 500 million people in the middle class, right? That's twice the size of the United States. That's what I call an addressable market, right? Now, it's not as easy as it's not easy to address that market, but we can talk a little bit about that. So what are some of the challenges that the U.S. folks are up against as they pivot? And again, there's two, right? There's a commercial side and a regulatory side. On the commercial side, it's very interesting, because I talk to a lot of technology clients, consumer product clients, and where are they all based? They're based in Shanghai, they're based in Beijing and Guangzhou, all tier 1 stuff. Well, guess where all the growth is? There's 280 cities, over 1 million people in China, tier 2, tier 3, and tier 4 cities. And guess what? My U.S. clients have no idea how to access those markets. It's all new. And by the way, those could be different cultures and different languages. It's not like selling between Florida and Michigan, right? So that's an entirely different thing. Here's the other thing that's really difficult, is that China is still relatively closed off. I don't know if you folks heard about on the media panel, but it really still is one of the most closed off to foreign direct investment, and it's gotten better, but especially in and around technology and certainly some of the media stuff and others, it hasn't risen. So, the bottom line, and again, one of the reasons I'd like to be, looking forward rather than looking back, is my U.S. clients are looking for partners, alliances, and other folks that understand the Chinese market. So it's very clear to the U.S. clients that they can't go at it alone, and that they need Chinese partners and alliances. And so I think as we intertwine some of that in terms of the conversation on the investment coming this way. Sorry, that was long-winded, but.
Thank you. So any one of you have any comments on the first topic we are talking about? You can add a little bit more.
I think I'll just add, a lot of the activity that I'm seeing as a banker here, representing companies here in the U.S., I've got one client right now, for example, which is one of the leading companies in the VR space. They're a company called Jaunt VR. They're based in Palo Alto. They have a studio here in Santa Monica. And the reason why they hired us as investment bankers is because we had unique access to about 3,000 strategic, corporate, and financial investors based in China, Greater China, and also other parts of Asia Pac. But one of the reasons why they wanted to hire us was because they felt that for their next round of capital, they wanted to raise capital from investors based in those markets. Kind of going back to your point, Curt, because they know that, especially in the VR market, for anyone, there was a discussion about VR just now, I think, before coming over to this panel. The market over there in China is probably going to be the bigger market and the faster to adopt VR. And so they wanted to make sure that they had really strong partners, investors, that could help them, provide a distribution channel for the content, the VR content that they're producing, distribution into theaters in China, distribution into amusement parks and shopping malls and whatnot. And, the best way to ink those kind of partnerships is, you can always, form a joint venture or, some sort of strategic alliance, but what is increasingly happening now is that these companies in China are willing and interested in actually investing into the U.S. company and concurrently building that partnership as well, so that all the interests are aligned. They want to see the U.S. company succeed. They will help the U.S. company grow and distribute the content in their local home market of China and tap into that Chinese consumer. And I think you're starting to see in many fields, especially in the media and technology world, those kind of alliances emerging. And that is what is dictating a lot of the investment flows right now coming from China into the U.S. And also, not just investment, but M&A activity as well. You have Chinese companies that want to buy assets here in the U.S. To basically, going back to Curt's point, take some of the products that are being acquired or some of the talents, especially the talent that's being acquired from these companies here in the U.S. and to import that know-how back home in China.
Okay, you're talking about the Chinese company come over to purchase U.S. company. I have now the next segment is financing. I only have one question for Dan. What is the most common form of financing for Chinese investor entering U.S. market? And a number of Chinese companies prefer paying cash during acquisition of foreign firm. Why do Chinese companies prefer this seemingly costly financing option? What are the advantages of this method?
Good luck.
Yeah, exactly. So first of all, my perspective might be a little bit different because I cater to the technology industry, and so when we think about financings, we typically think about venture investing, and so a lot of activity that I see is Chinese strategic corporates. Or, there's a lot of cross-border venture investment firms coming from China or who have dual offices in China and the U.S. A lot of them invest in the form of cash equity. That's right. They usually do not like to invest in kind of debt securities. In terms of how they would finance acquisitions of U.S. companies, honestly, I think I don't think it's necessarily true that every private equity fund out of China or every strategic out of China will necessarily finance the acquisition of these assets purely with just cash. I've seen, look, if you're Wanda, you have access to lines of credit. You're going to use those lines of credit. You're not going to open up a line of credit for no reason. You may be referring to maybe the wealthy individual investor. The wealthy individual investor, yes, has a tendency coming from China to bring a suitcase of cash and buy a house for $2 million with no down. That's a little bit different from the activity that I see. Corporates, right? Corporations, especially sophisticated ones, and corporations that are large enough, they will do the proper kind of discounted cash flow analysis. They have a greater understanding that in some cases for certain assets that they're acquiring here in the U.S. that it does make sense to tap into leverage. So I don't think it's necessarily for every situation. I've seen both sides actually. Yeah.
How about Curt? What do you think? The U.S. companies go to China, the financing?
Well, so most large deals, as Dan said, that we deal with, and in fact, I don't know if you guys saw the slide up there in terms of the recent transactions. I don't think anybody was paying cash on any of those. Those were all financed, right? Yeah. So I'm not. I think you're spot on. I think it was a difference between a corp and a.
There's a difference between corporate investors and corporate buyers and individually wealthy buyers and investors. Right?
Now the main issue that you all should be aware of is increasingly, and this is a real issue in auctions here in the U.S., is that on these larger deals, as we all know, there's foreign currency restrictions, right, coming out of China. The ones that the companies that can react quicker are those that already have cash offshore. That's right. And so that is actually a strategic advantage in bidding and auctions and things along those lines.
Okay, thank you. Well, I don't know who wrote this question, cash. Please tell me who had the cash so I can talk to them. But anyway, the next segment is challenge.
Well, I think
Okay.
they made a good distinction.
No, they
though.
made a
The
good-
distinction is
Corporate, you know.
Right,
and-
for
and
individual.
versus,
Right.
versus individuals that
Yeah,
might come
individuals
over, you
sometimes
know.
they're buying real
And I think
estate.
that
They would like to-
they're very different.
Right. Okay, the next question I would like to ask Bill. What are some typical challenges that your customers from China encounter when they invest in US? And what's some of the important regulatory consideration that affect the deal being made today?
Well, they're facing basically from two sides. The first question is financing and foreign exchange control. If they're a high net worth individual, they can bring in cash, buying a residence, but not for those corporations. If it's a corporation, I think right now, I think the Chinese authorities allow those companies to invest in overseas, as long as they can approve. They're approved by the government. Otherwise, there's no way for them to just remit the money or wire transfer the money to foreign countries to make a big scale kind of investment. That's from my client's experience there. So it's the first question is about how to remove the money, and then when they incorporate here, they want to know who should own what percentage of ownership here. And it will complicate the question if they want to send those transferee executive or managerial officer here to use that L1 visa to work here to direct the company's directions. That will complicate a little bit about how to structure the ownership. And yeah, that's about the general question they're facing.
There's a couple macro regulatory things that I think came up that are worth clarifying a little bit. I call them the Trump regulations, so let's talk about those a little bit. Everybody know what CFIUS is? Everybody heard okay. So most deals in the US don't need to be approved. Most deals in China need to be approved by somebody. There's only one agency really in the United States that has to approve deals. It's called CFIUS, right? Mm-hmm. They have one standard, and it's a national security standard. Okay? Unlike Canada and Australia and some other places, there's also additional tests. Here's what's going on with CFIUS. You heard it in a couple of the other panels. Trump has now nominated a couple folks to CFIUS that don't like China. Okay? So that could be potentially a big block. Two, the Democrats, Schumer, is now looking at changing CFIUS to add a net economic benefit test. That would change the entire landscape for all investors. Now, here's what I think the bottom line is. That's not even a committee yet. So by the time that went from committee to through Congress to the president and got implemented, we're a year or two away from changes in CFIUS. Okay? That's the bad news. The good news is I actually like protectionism, and let me tell you why. I'm an M&A guy, right? So trade, what happens when you have decrease in trade? More M&A. Because the Chinese are going to invest here anyway, right? It's just they're not going to do it through trade, they're going to do it through M&A. So that makes guys like us happy because we have more investment dollars coming in. Now here's the good news. There's two good news items. You heard from my partner earlier, the tax regime. It's going to change. It's going to get less complicated, okay? Good for everybody. And here's the other one. You don't necessarily have to pay attention to only what the federal government is doing, right? There are incentives at the state and municipal level that are as important to investors as all the nonsense that's going on in Washington, okay? And those folks are interested in one thing, and that's keeping employment in their home cities. So again, if you're thinking about investing in the US, make sure you look at all of the levels of regulation, not just the federal ones.
Okay, Curt, now I want to ask you the question. In your opinion, what are the risk factors that investors need to be aware of when making overseas investments, especially U.S.-China cross-border investments?
So going this way. So this is going to sound maybe too much of a truism, but people are business, business are people, right? You can mess up your financing. Sorry, Dan. You can mess up your regulatory stuff, but the number one reason that deals don't go through is because of people, right? So what's going on with the U.S. labor force right now? Well, first of all, remember Dan earlier said that notion about a lot of the IP is in the process? Mm-hmm. It's not sitting on trademarks and patents that you send back to China. It's sitting in people. And guess what? They don't want to go back to China, right? So you have to figure out a way to get all of that IP into your organization once you do a deal, right? So at the same time, American management is delayed over the years. So a lot of times, all of that talent and IP is sitting lower in the organization. People go in and buy companies all the time, and they're like, okay, well, we're gonna make sure the senior execs are all on board. Well, guess what? A lot of times, senior execs don't know anything, right? So you have to go a little bit lower in the organization before you do that. Here's the other thing, and I'll just do one quick story. We were working, and the thesis of the story is compensation is not the only consideration that motivates people, okay? So this is a Chinese buyer that bought a wine company up in Napa, close to where I live. And, I looked at him when we were going through the integration planning, and I said, you just bought a technology company. He's like, what? That's just nonsense. What are you talking about? It's a wine company. I go, well, by the way, all your winemakers, you guys love this, were all ex-technology people that didn't need to work, didn't need money, and already made all their wealth. So what did they care about? How do you retain people that don't care about money? Right? Well, you let them make the wine that they want to make. And so it went into their employee agreement, number one issue, we get to make the wine that we want to make. So again, big picture, care about your people first, everything else will work its way out.
I just want to touch upon it. So Curt made a very good point, and one of the issues that I see a lot of times with Chinese companies buying companies here in the U.S. is that one of the biggest challenges has been integration. Like once they buy the company here in the U.S., a lot of Chinese buyers a lot of clients have told me here in the U.S. We just had a Chinese buyer buy us, and we haven't heard anything from them for like 6 months. and when you're a seller, you're like, is that a good thing or a bad thing? Sometimes sellers, once they sell their company, they just want to just get out of there. So some people view it as a good thing. But sometimes sellers, when they sell their company, they had a vision of partnering with that buyer and going after something even bigger. And that's where sometimes the Chinese buyer can fail, right? So I do think that in the future you'll find more sophisticated buyers coming out of China that will not just buy something because maybe it's a vanity play, right? Mm-hmm. Maybe they just want to be able to say that they own, Dick Clark Productions, right? Or Legendary Pictures, or just a Hollywood studio. But really, truly think about, okay, how do we then integrate, the organization here in the U.S. with our home organization back home in China? How do we take the know-how that exists here? That's one of the reasons. That's one of the primary reasons why we bought this company in the first place. But how do we leverage this know-how and truly apply it to our home market? More of that needs to be done, I think. And actually, that feeds into your business, Curt, right?
Yeah,
I mean, there's
does.
A lot of revenue opportunity there for you, I would say.
Yeah, for sure. So please do that because we could be busy.
After my transaction is done, yes, exactly.
Well, you have 2 fourths. All right. Now, the fourth segment. I promise, Phil, I'm going to give him the most difficult question. Uncertainty of regularity trumps policy. What is your outlook for the U.S. private wealth management market?
Did you say regulatory?
Uncertainty regarding Trump's.
Okay. I thought you said regulatory.
Regarding.
It reminded me of something Dan said earlier about $2 million in a briefcase. And as a banker in a regulated industry, I want you to know that I've never ever seen $2 million in a briefcase. But,
Figure of speech.
okay. Trump. Boy,
President Trump.
President Trump. Okay. Well,
And which month Trump, right? Because
Yeah, right.
early on he
Yeah.
was, and now he's flip-flop. But anyway, go ahead.
well, I'm encouraged by the moves that President Trump is making towards China and this most recent thing with North Korea and all that. But I think long term, if you're looking at and I deal with the equity markets and the real estate markets, and for the individual side, not in the corporate realm that Dan and deals with, and Curt deals with, yes. But I'm very optimistic, to be honest with you, about the business policies that Trump is employing. If we can get tax reform, if we can get some of the other, healthcare reform, and a positive healthcare plan. I mean, the plan they put together was really, it got the kind of notice from the public it deserved. It wasn't well thought out. It didn't do the things it was supposed to do. And those kind of plans, we can all look at why it got voted down, and from political reasons. But it's a good thing it did. It wasn't going to help solve the healthcare problem in this country, and so I'm glad it was voted down. But as you look at the political, public political policies that he's enacting, you've got to be optimistic. I mean, tax reform hasn't been executed in this country since 1986, so there's some real opportunities, and I think there's opportunities to work with China in a more productive way, and to hear the removal of tariffs and things that he was threatening in when he was running for office is just encouraging. I think the fact that he's dealing on a geopolitical problem in a way where he's saying that we're going to give you a better deal on trade if you'll help us on this is the first president of my lifetime, and you can see my hair's very gray, so it's the first president of my lifetime actually heard put that on the table in that way, which I think is kind of refreshing, So I think the market's going to do well. I know, you look at what's happening, and stocks are very expensive. That doesn't mean that expensive stocks don't get richer and more expensive. They do. Rates are low, and they're going higher, obviously, but not, I don't think, appreciably higher. So I'm very optimistic about the markets and wealth management and what I do with high net worth Chinese clients. I think Chinese clients have come to America and done very well, but often have wanted to do it all themselves. That's been kind of a trend that's reversing now. They're seeking guidance. They want to use a team of people to help consult with them on all the various problems. Like I said earlier, wealth is complex. Hanging on to your wealth is complicated. Making more money is complicated. So I'm very optimistic around what Trump says. Now, the problem in saying that, the other side of that, is if the things that he's talked about don't get done, that's going to change the calculus, a lot. So that's it.
Okay, thank you.
Okay.
Bill, what is EB5 continue to play and contribute to the growth of Chinese investment in the U.S.?
I think EB5 will still be the one of the most important vehicles for foreigners or Chinese investors to come to this country to invest. But it needs to be reformed. EB5 has a lot of problems, especially with regard to the regional center. The regional center is a bigger project. They got approval first from the Immigration Service, and then they try to attract foreigner investors to invest, usually $500,000, and then, but they don't joining the management party as a management party, and then they wait. They wait for 2 years, and then they get supposedly automatically get a green card. But a lot of abuse has happened in the past, but some of them just fail. I mean, nobody can get any money back, and the green card will be failed also. So that's a very tragic situation. I think the Immigration Service also maybe the State Department and Treasury Department should consider something helping the Immigration Service to improve that. I still think it's an effective way of attracting those high net worth individuals to come over and invest. Well, for now, it's standard amount would be $1 million to invest and hire 10 U.S. workers within 2 years. That helped the U.S. economy a lot, actually. So I think it's a good program, but it needs to be reformed.
Okay. Thank
There's
you.
a lot of abuse in the program.
Oh, yes,
I think,
yes.
and
A lot of-
people are bad operators that get involved and
Right.
take advantage of people.
Yes,
Is
yes, yes.
Is that the kind of reforms you're talking about?
No, of course not.
No?
I think it's a very serious problem.
It is a problem.
It's a very serious problem.
Okay, question for Dan. We heard about One Belt, One Road, OBOR. It's one of the most important economic and development strategies in recent years. How do you think it will affect the relationship between U.S. and China?
Well, I think, honestly, that kind of central tenet was for me, right?
Yeah, totally for you.
Yeah,
Good luck with it, man. I have no idea how to answer that
Well,
one.
no, I mean, look, the way I would answer is this, right? I mean, so the activity that I see, right, these are Chinese companies that are, acquiring U.S. companies, investing into U.S. companies, European companies. I mean, again, a lot of that is being driven by, in the technology field at least, the ability to gain access to certain technologies, which ultimately will play a role in this, one, OBR kind of goal that the government's laid out. And, all of that is meant to, again, as I mentioned, China's suffering from a shortage of artificial intelligence engineers, right? It turns out America has a deep well of data scientists and data engineers out here. So, that's one of the reasons why you're seeing, companies in China investing into many a startup right now, especially focused on AI. If you go up to Silicon Valley, all they talk about every single day now is AI, AI, AI. It's just, everything's AI now. And so, indirectly, I think it's driving the development of this OBR. That's how I see it from my industries, focused on the media and tech world. I don't know, Curt. What do you think? I mean, are you seeing something a little bit more
thanks. I'll
directly
tell you,
relevant there?
That's
a great way to punt over to you.
Yeah, thank you. Nicely done.
Well played,
It's a tough one though. But let's bring it back to where I think Dan was heading with that. Was, remember, there's two reasons that the Chinese would invest in the U.S. One, because the government tells them to do, or two, because there's some sort of private, reason to do that. And OBOR is a government program, right? So, I don't see, Caterpillar or heavy construction or anybody else, being bought by a Chinese company in order to do OBOR, right? I don't think that's going to happen. Might a Westerner vendor be interested in helping build out the infrastructure? Sure, right? It also depends on what you mean by OBOR. I think about it not just as physical stuff, but also some of the stuff Dan was mentioning in and around IT infrastructure, right? In that case, maybe we do see a little more investment because of that policy. Frankly, I don't think at the end of the day it's a big difference maker in terms of Chinese investment into the U.S. How'd I do, guys? Was that?
Thank you. Same question to Bill. What do you think, Bill?
Oh, you're killing us.
We're still on.
The same question, OBOR.
Who drafted it? Well, it's OBOR is a very huge project there. I think it's working. And compared to the U.S. strategy, I think U.S. should do something to either supplement or accommodate or trying to interact with this project, this huge project. I think U.S. can do a lot of things with China because actually both the largest economies are supplement to each other in many ways. So right now, I think the Brookings Institution report, 2015 report, I just mentioned at the beginning, you should look at that report because that report is saying there should be a bilateral kind of treaty to deal with the whole situation. That's in addition to the maybe the Korea Peninsular kind of crisis exchange. I think it's a grandeur kind of worldwide plan. Economic-wise, it will be worthwhile for both countries to do that. A treaty, a bilateral treaty.
I didn't mean to imply that I thought there was actually a plan about
Yeah,
what
yeah,
just
yeah,
happened.
of course. Somebody can say,
There's a reaction and an
There's a
emerging
reaction,
policy
right.
based on a reaction, I
Yes.
think, but that's,
yeah.
it's the right direction, at least.
Yeah, of course it's the right direction, but there are many things, both parties can do to
Okay.
improve the worldwide, maybe,
Okay,
future.
thank you very much. Last question for Curt. How is the environment for M&A, merger and acquisition in China today? Which sector present the best opportunity for U.S. company?
So that's M&A into China, right? Well, let me tell you where it's hard. It's hard in technology. And why is it hard in technology? Because China's developing its own technology very, very quickly, But let's give China a lot of credit. There are Chinese companies that now have developed in their own right, a very nice set of products. This is not the 1990s, and for Cisco to go head-to-head with Huawei is a very real thing, and guess what? Why Huawei is winning right now. Here's the other interesting thing that's going on in technology. Everybody hear that HP sold half of their business to Tsinghua? I'm sure I butchered that. Why did they do that? Because they couldn't get market access, right? So all the technology companies are having to rethink their go-to-market, okay? So that's a difficult one. Who are the happy folks? The happy folks are the retail and consumer folks, right? Because 500 million new consumers, right? So this is what everybody's looking after. It's not just Americans. And we were talking about some of these things last night at dinner, right, Dan? So what are the things that the new Chinese consumer cares about? Well, they care about their quality of life. So guess what? Wellness. Anybody that's going into wellness? Great. And guess what's also driving some of the things we were talking about in terms of entertainment? Well, they have more money to spend now, right? So any of these Chinese, we call them Chinese-themed assets, right? And I want to bring it back to the point that you were making earlier, Dan, in terms of there's this in my mind, this perfect nexus where the U.S. folks are having difficulty navigating China, and the Chinese are doing pretty well in the U.S. but are struggling a little bit. So the winners out of there, especially these students, the winners, and this is the thing you got to get your head around, are the folks that can get into the middle of both of that, right? Bicultural, bilingual folks that understand both and kind of find out how you can win, right? So HP and Tsinghua, okay, some people would say that's a loss for HP. I don't think so, right? They're going to make money, and so is the Chinese company. So those are ultimately, I think that's the winning formula. And as you say, is whether it's an alliance or a joint venture, who knows? It could be anything that you want, but it's that cooperation that I think ultimately will win the game in China and in the U.S.
But I'll add, I mean, I think it's, you're not going to, well, what I see from my side is that you're going to find more companies here in the U.S., especially in the consumer retail space, as you pointed out, wanting to partner in some way. Mm-hmm. It may not be that the U.S. company can actually acquire the company in China, but it could be partnering with a distribution partner in China, joint venture, or just even form an alliance and have an investment. But the point is that there's no doubt that this Chinese emerging consumer is viewed as a bit of a gold mine for a lot of companies globally, here in the U.S., Europe, and elsewhere. Also other parts of Asia as well. So you're certainly going to see, especially in industries like consumer retail, where the Chinese consumer now is in a position to buy stuff. People or companies wanting to have access to that market. That's right.
Hey, thank you. This is the end of our discussion. And we are going to have a Q&A. But before that, I have one question for my good friend Phil Hurst. What do you think about Korean
bonus question.
peninsula? Are we going to have a wall?
I thought this was about China.
Wow.
Answer the OBOR question.
We're spreading now to Asia and
Okay.
geopolitics now.
No, I don't have any comment on that. I certainly hope that we won't, and I think China has influence, and I think that there'll be resolution without war. I really think it's in everyone's interest. I don't think that's going to happen.
That's great. Okay, let's give a big hand for that. Okay, now we open for Q&A.
Thank you for being here, and I liked your presentation. So my question is, how do Chinese buyers, both strategic and financial, when they buy assets in the U.S., get their debt financing? Is it mostly Chinese banks or U.S. banks that are providing that? And based on that question, do you see a potential for Chinese sponsors to perform LBO on American assets like the 80s, where Blackstones and KKR of the world are doing the same? Thank you.
I think this question maybe Dan can answer.
I think generally what I've seen is that Chinese financial sponsors, especially on the private equity side, they usually, the financing terms in China are much better than they can find here in the States. So they'd much rather use, their local bank in China to do that. The bigger companies like, Wanda, they will be able to tap into global investment banks, global, lenders. And so the bigger you go, yes, the more access you have to both local and global sources of capital. But generally speaking, I've still seen mostly financial sponsors out of China tapping into their own sources of capital. I mean, it's just, in many cases, the lenders in China, they're willing to lend, at higher leverage ratios, than you would find typically here for a lender in the U.S. And the cost of capital tends to be a lot more attractive. So that's what I've seen, generally speaking.
Yeah, given the leverage that's already in these transactions, you might argue that there are already LBOs, right? Now, to pick up on Dan's point, though, when we see a traditional LBO in the U.S., you're going to see different elements of the cap structure, right? You're going to see traditional bank lending, you're going to see mezz, and you're going to see equity, right? And I don't think we've seen kind of that middle element, the mezz element, show up at all at this point. By the way, good idea for anybody, get into mezz. I totally agree with Dan, though, in terms of the bank financing. I mean, we talked to Bank of China and ICBC and everybody here. That is still the way that most folks are doing the financing. That'll change over time. And the reason that, and again, that changed for the Japanese, who used to traditionally trade out of Japan, or rather get their financing. But again, as big as the folks of us that focus on China know of Wanda, it's still not a household name in China. So there needs to be a little bit of recognition in terms of what they're all about before we see a lot of leverage in the U.S.
And Joseph, I mean, I think for your business too, I mean, banks like yours that are positioned as kind of cross-border lenders, with an inherent history, coming from China and also here in the U.S., I would imagine that, you'll find more and more opportunities to start financing some of these transactions too.
Right, we have
Kelly is supposed to be doing a lot of this stuff.
Yeah, we have our loan department. They have a relationship with several banks in China, and actually I visited several banks a few years ago, and we have both sides cross-border investments.
I think some of these companies coming out of China, they're just not big household names, as Curt said, and so the banks here, like a Bank of America, would hesitate perhaps if they don't know the borrower long enough and deep enough. So,
Right.
But you're in a better position, to assess that kind of risk, I think.
Sure.
Right. Most of the Chinese company, the bank, right, Phil?
Our stock's sitting next to its 52-week high. Very right.
I had a question for Curt. In the next, and the rest of you as well, in the next 5 to 10 years, do you see there being a relaxation of the 4 types of capital structures, the 4 types of corporations you can have in China as a foreign entity? And do you think there'll be any kind of relaxation on the repatriation of money or profits from any kind of M&A acquisition in China?
So that's a great question. I wish I had the answer, and I'm not sure I'm qualified to answer it. That usually doesn't stop me from having a view. So I will give it a stab. Look, and you're talking about the 4 corporate structures that are currently in China. I think they're going to get more complicated rather than less complicated. What's happened in the U.S.? We used to have, again, when I started my career, a fairly simple, straightforward corporate structure. Over time, because of the tax code, right, things have changed and gotten more nuanced and more complicated. Well, that's inevitable in China as well, right? And so that's kind of an overall thing that I would say. Again, I don't know, Bill, do you do China a lot? Can you go answer that one?
Can you provide me with an even more specific kind of situation so I can focus on maybe
Um,
narrower.
Well, currently, a lot of companies elect to only do a representative office, which
Right.
doesn't allow them to do any direct marketing and direct sales except through a foreign home office. Do you think in encouragement of maybe inviting more companies to move to China, especially to get some of this startup talent, that they will relax those standards and sending money from those people back to the United States?
To my understanding, when it's a representative office, you don't do business transactions by that representative office. You may arrange people to sign some documents or contracts there, even doing notarization for the genuineness of the proof the genuineness of the document. But you cannot do business transactions by a representative office. That's my understanding.
You have to go to the symptom, right, of this. A lot of the reasons that those structures are set up is because of some reason that the government wants them to happen, right? Everybody know what a VIE structure is? So most of the internet properties, and you can't. There's restrictions on media assets, right? So the VIE issues arise because of a Chinese government intention. Those only go away once the Chinese government decides, I'm not going to restrict media anymore, right? Am I making sense? Yeah. So I think a lot of the structures will follow once the Chinese government decides on a bigger macro issue, and it'll follow. So I'd follow the strategic issue and then solve for the tactical one, if that makes sense.
I think there's certainly a desire, at least on the part of myself, to see the ability for foreign companies to actually own a piece of asset or company in China directly. But I just don't know if I'll see that in my lifetime,
As
to be honest.
an entertainment, you're speaking, right? In terms of the media assets and those kinds of things.
Media,
Yeah.
frankly, any asset. I mean, look, at the end of the day, I think this is fundamentally tied to the, the government philosophy of communism, right? That property should be held by in common, right? And so, here in the U.S., we're a country that's based on legal principles where an individual can actually and have property rights, have rights to property, and so that fundamental concept has to change. And I don't know, that's a different question and a different discussion, I'd say. Yeah.
Okay, time's up, and I want to thank our organizer, our sponsor, of course, our panelists. Let's give them a big hand.